Good morning, Forex traders. This is Vance Williams here out of the United States in the Seattle area. Welcome to my morning Forex trading show. It's Thursday, January 8th. While it is the 8th, we've actually only had 3 regular business trading days. But what a start to 2015. So let's get right to it. I want to quickly just show you once you click on the show, be sure to click on this Be Part of the Conversation right here, because from time to time I'm going to be adding links, and there's going to be other ways to participate and ask me questions. But you can follow me here on Twitter, or you can go to my website, forexartofwar.com, where you can download free books and look at trading options. So that's all I have to say about that. Do have a really fantastic offer coming on my training. You really have to look closely at this to see the incredible value that's there. But keep in mind that what I do of value, about 90% of what I do is coaching. So keep that in mind as you take a look at it. All right, so remember that what I do on this show is for your educational purposes only. I'm never intending to give you any advice on taking a trade in either direction, no matter how accurate you see me trade. In fundamentals today, yesterday the Fed seemed to attempt to take a little momentum off the U.S. dollar. What am I? I'm on the CAD. Let me at least go to the euro here. They basically said that. Wow, it just flew right out of my mind. Wow, zip, gone. How about that? That's a first. But here's what they said. It just came back to me. They said that well, I'm having an unusual morning. Must be just a long week, huh? Holy smokes. Anyway, they said that they weren't they were being patient about raising rates. So that's kind of a little bit of language to kind of at least talk a little bit of this momentum out of the dollar. But in the Asian session, new lows were created, the pound pushing into the 1,500 territory and the euro into the 1,700s. I was reading something written by Dean Popplewell this morning. He had some really good thoughts. He said he thought that some managers were having to change their position, shifting out of the euro because of the dramatic change. And also a lot of traders who've been missing out on this move are starting to get in the game, not wanting to miss more. I would just on that note, I just want to say, be careful about that I'm missing out mentality is really never a good reason to trade. So watch out for that. Be careful. But so far in 2015, selling any pullback has been rewarded big time. The Fed did say also that the bullish moves by the U.S. dollar are temporary. Now, if I were to venture a guess about why they said that, I'd say that they have a number in mind that they're moving to, and they're not doing anything till it gets there. This has been confirmed by their lack of any action at all to slow the climb of the dollar. So I'll be watching for clues about what that number might be, but we're not too far from the next major number, which is 1,500, and that might be where they're looking for a little bit of a respite. On major bank trades, I don't have much to say at this time. Most of them have been looking for pullbacks based on a market we had in 2014, and most of the orders are not being picked up. So I'll talk about specifically about the banks and their trades during our live trading session this morning with our team. Okay, let's talk a little bit about the buyer-seller behavior. I did want to show you a couple of pound trades here. This is the 30-minute chart. By the way, it's definitely noteworthy to say that these moving averages generally represent the intraday trends, money that's in play over a 1 to 4 day, 5 day period. And I want to show you that this has been an extraordinary trend of 537 pips. You know, the average is 100, 120, and this one is currently so much pressure to the downside, has not been able to turn up in 537 pips. The euro, let's take a look at that one. Since this moving average has turned over, we're already at 408. So these are extraordinary moves. Okay, we thought 2015 was going to be big. It's really started off with a basically a run back for a touchdown on a kickoff. So it's pretty huge. But let me show you these trades. You can see that price was moving down. Now there wasn't an advance on this first one, but there was on the second one. And those of you who are on our team know what that means, but I still want to show them to you anyway, because we're getting moves inside of moves now. But here's that pattern that we look for. Clear move, pullback, second push. There's one. And here's the second one. Very strong move, pullback, second push. I haven't been into our member area yet this morning, but I'm sure that some of you guys caught at least one of those. Price is stalled right now. It's stalled and just correcting. At least this move is corrected and it's climbing a little bit. So, I mean, I'm almost hesitant to talk about a correction now, but you know, price never continues in the same direction forever. So what I would be looking for here, let me show you how we might confirm a little bit more of a correction. We would put a fib right here down to this bottom. Oops, looks like I still have one hanging out there. Hang on just a second. I've got a lot of stuff in the way here. Let me just trying to get rid of that fib. Roof line. There it is. Okay, so what I want to do, so I want to put this one right here. So what's going to be an important level here is 150.80. So let me just go ahead and put a label on that. So that's going to, if price closes in a 30-minute candle above here, we'll probably get more of a move up. But keep in mind, there are orders everywhere in here to sell, for the euro especially. The euro, let me take a look at that. Let's see. I'm going to say the euro, a move above 117.95. You can also see there's a really good supply area right in here. But again, there are all kinds of sellers. So any moves that come up in here, you got to be expecting that, you know, anything that moves is you're going to get pushback, even if the market decides to go the other direction. So watch out for that. The main thing you want to watch for is new moves. So below this level, it's going to be 117.60. I'm going to go ahead and put that on there. So move below 117.60. Look for any strength below there. And then for the pound, we're going to put insert label. That's 150.35. There you go. So so in here you're going to have a struggle between, you see right here, buyers, and then here you're going to get sellers. And so the buyers will gain a bit of an advantage above 50.80, and the sellers will gain an advantage below 50.35. Some major banks, at least one, did enter a pullback here on the Australian dollar, looking for another move down on medium-term trades. By medium-term, we're just talking about a little bit bigger moves. So they're in that trade. The yen still has this strong top here that it's not been able to break, and basically traders have been trading medium term any pullback. And what I'm talking about here, let me go to the 4-hour. So this is the huge move, right? And so they're basically buying pretty much any pullbacks in that direction. Well, that's about it. That's about all I have this morning. Again, you know, you can get 8 things they don't tell Forex traders here in my book. Don't worry about getting spammed. I don't think I've even sent an email out for a couple of weeks. I just don't like email anymore. I get so much spam myself. But I definitely will send an email. The best way to stay in touch with me is to follow me on Twitter. So if you don't have an account, get one, because I'm moving completely away from email. I can't even email to my friends without it going to their junk mail anymore. It's crazy the way that the U.S. has allowed pretty much everyone to spam everyone all the time. So, you know, that email is a efficient way of communication is going by the wayside. Anyway, but nonetheless, sign up here and you can get 2 free books. That's all I've got this morning. You know, welcome to 2015. It's been one heck of a week. Our traders, I'll see you guys in about 45 minutes in our live trading room. Bye, everybody.